Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. Good morning, everybody. It is the 17th, new week. I don't know. I don't really know. We're getting into the later half of the month. See what kind of news and stuff we've got on here. But first, let's go to the chart, just kind of review where we're at. I don't believe that we had anything too significant happen over the weekend. So let's just remember that earlier in the week, last week, we had declines off of concerns about inflation. Then on Thursday and Friday, we had recoveries. Recovery on Friday was pretty good. I don't know. The market Reddit is pretty good, but when you look at it in terms of direction, it's a little bit. They didn't quite get there, so I don't know. And then the overnight session maybe slightly down. Yields have retraced substantially. So this was the CPI, right? They've retraced that substantially. So that's super interesting. I don't know. Like, the thing is we're only like 1 or 2 bad days away in treasuries from, like, new yearly lows. But at the moment, they don't seem like they're interested at all in doing that. So, we'll see. Coming over into the commodities, oil struggling a little bit. I think, a couple of things going on. One of the key ones being is negotiations with Iran, and if Iranian oil supply comes online here, then that could depress price. Overall, the world seems really on edge because of this stuff going on in Gaza and Israel. I think in part because Israel appears to have, is just like going balls to the wall. Like, we're gonna make sure that you guys really think twice before you do this again next time, right? And now, like, other world powers are getting involved, like China and Russia. Like, oh, this is pertinent to our security interests and things like that. So, it might be part of the sentiment in oil, just for some color, yeah? I know that's really intangible, but now gold and silver did pretty good on Friday. Gold in particular, gold outperforming silver a little bit. They're back up to their highs. Actually, gold making a new high. Silver there, just shying away from 28 though. But when you come and you look at the larger commodity complex, so like copper down 3 days in a row. The same goes for lumber, which can't show. Corn here, corn was down. Soybeans, if we come back, soybeans was down. So because the overall commodity complex has come back, and then we also have to talk about over here in Bitcoin. Oh man, Elon Musk just savaging Bitcoin over the weekend. All this is because of him. Man, live by the Musk, die by the Musk. I don't know how to put it, man. It's a bloodbath over there in the cryptocurrencies, and here at a point when cryptocurrencies should be doing well, but it's almost turning into a buy the rumor, sell the news sort of a trade with inflation at the moment. So it's like all of the commodities are coming back. Bitcoin is coming back. So what's the inflation hedge? It's going to gold right now. So things are looking good for our metals trade. But other than that, Vlad says he's bearish on everything again. Well. Okay, so today we get the New York Empire State Manufacturing Index here in a few minutes. We're looking for an estimated reading of 23.9. After that, I'll turn my robot on. Remind me to turn the robot on after the news. Let's just come over here, pull up Forex Factory, and look at the whole week. what do we got coming up here? Okay, so today we got housing market index and some Fed speakers. Tomorrow, building permits, housing starts. Wednesday, not much, just some Fed speakers later in the day. Thursday, Philly Fed, unemployment claims. Friday, flash manufacturing PMI, services PMI, and existing home sales. Then next week should be even worse, right? Next week should be pretty, yeah. Next week, pretty dead. Oh, well, they got preliminary GDP on Thursday, though. PCE, Chicago PMI, consumer sentiment. You get into the later half of the month, there's not as much news, and it makes it a little bit more difficult for us news traders. Frontier says, hi, how are you? Let's turn on the text to speech here. We got about a minute and a half before this all comes through. Yes, does look weak on the weekly. What are your thoughts? Well, I don't know if my thoughts matter on this, to be honest with you. Yeah, so you notice when I go through this on the day, I'm mostly looking like, okay, what moved and what does it tell us about the macro environment, right? So we come over here in ES, right? There was a concern about inflation, and then they retraced it. Are we going to turn back down today on the daily or weekly chart? I mean, I don't know. I don't think that the kinds of patterns that we just see there on the chart necessarily tells us anything. It only tells us something if we can explain why. If we can look at it and understand what's going on and how it's impacting people and traders and so forth. And so, they bounced off of a 50 moving day average. So I think that the trend is intact for now. The thing is there's the inflation scare, but there's then the counter to it is, yes, but it's transitory, right? It's temporary. They're going to go away. And when you look at the numbers that were big inflation in the last CPI report, yes, a lot of these are transitory. I think that the vehicle sales in particular is not something that's going to last forever. Right. So the market's going to kind of want to maintain the trend per se. But there's a couple of other things going on, right? Well, first of all, we know that the Fed stimulus, like the amount of money printing, it's not as high. That's why we've kind of been going sideways a bit. We also know what else we got going on. Well, we're coming into the summer. This is some seasonality kind of involved there. So, a lot of analysts believe that most of the numbers are baked in. By the way, what was the number that we got there? There's no market reaction to it. 268 versus 292. Oh no, that's the number hasn't come through yet. Anyways, so I see some reasons for the markets to kind of range here. So I'm being a little bit cautious because I know that this might be a good situation for me to reduce my risk. Speaking of which, I should come over here for the ES. Because it's Monday, I'll keep that on my experimental account. Okay, since we did get the news, I'll turn on my Sim Trader now. We should also add Gabby back on here, huh? Okay. Let me blow my nose. See, Anthony Crudelli retweeting out today John's charts. Remember, you don't have to trade every day. You have to protect your capital every day. Pretty critical to remember coming into the summer here. I see foreign currencies hitting highs against the dollar, like the Australian dollar or the Great British Pound. Well, yeah, so I do believe that the dollar will continue to be weak, but I mean, they're having a really hard time breaking 90, right? So I don't know if that does happen. I don't know when that's going to resume. We may be in a period where we see a little bit of dollar strength in the midterm. In fact, I believe that Jeffrey Gunlock was saying that he sees some temporary dollar strength in the near term. So I don't know. That whole thing is so the thing on all of that though that's interesting, the thing that everybody seems to be agreed on is that they want to be long European equities versus US equities. And I'm sitting here thinking, okay, yeah, except for that, what happens when things fall to crap in Europe again? Like, this is exactly what happened after the 2008 crisis. Everybody was like, well, we don't know about the dollar anymore. And then the euro crisis happened, right? So be careful that everybody piles in on that trade, because that's the one that will flip right on you, you know? No, man. Man, I'm seeing a lot of stories about this Space Force commander removed after comments on podcast about the woke Marxist ideology infiltrating the military. And I find this story really puzzling. I'm not quite sure how it fits in because, for starters, I'm surprised that saying that on a podcast like gets you removed from the military, but I've never been in the military, so maybe that's just me not understanding military culture very well. I don't know. It seems weird to me. But then everybody's like picking up on it, and every outlet is interested in this right away. Is that just because it's, that's the thing that gets people going? Is that just what gets people going these days? I don't know. What are people saying here in Discord? Zero Hedge, 39 million households, including most U.S. children, to get $3,000 monthly. Wait, what? In the latest evolution of creeping universal basic income, the Biden administration officials said on Monday that a poverty-fighting measure included in the COVID-19 relief bill passed this year will deliver monthly payments to households, including 88% of children in the United States, starting in July. The Democrat-backed American Rescue Plan signed... Oh, geez. Eligible recipients will get up to $3,000 per child. What? Well, you know what? Wait. Okay, annual 529 contribution limits. In 2021, many families are trying to make the most of their tax advantage savings accounts. Those savings for retirement may deposit up to $6,000 in an IRA or Roth IRA, $7,000 if you're over the age of 50, and up to $19,500 to an employee-sponsored 401k. But what about college funds? That's where it can get tricky since the IRS doesn't specify annual 529 contribution limits, and many 529 plans offer high total contribution limits. Most families won't have to worry about hitting their 529 plan's contribution limit this year. However, there are some rules to be aware of if you're considering making a large deposits. Really? One of the many benefits of saving for a child's future college education with a 529 plan is that contributions are considered gifts for tax purposes. In 2021, gifts totaling up to $15,000 per individual will qualify for the annual gift tax exclusion. This means if you and your spouse have 3 grandchildren, you can jointly give $90,000 without gift tax consequences, since each child can receive $15,000 in gifts from you and $15,000 in gifts from your spouse. Remember, the annual gift tax exclusion amount also includes non-529 gifts, so be sure to include any cash, blah, blah, blah. So if you're but does that apply if it's your kids? I don't know. Individuals may contribute as much as $75,000 to a 529 plan in 2021 if they treat the contribution as if it were spread over a 5-year period. The 5-year election must be reported on Form 709 for each of the 5 years. For example, a $50,529 deposit in 2021 can be applied as $10,000 per year, leaving $5,000 in unused annual exclusion per year. Then there's a lifetime gift tax amount. Aggregate limits. Unlike IRAs or 401ks, there are no annual contribution limits for 529 plans. However, there are maximum aggregate limits, which vary by plan. Under federal law, 529 plan balances cannot exceed the expected cost of the beneficiary's qualified higher education expenses. The limits vary by state, ranging from $235,000 to $529,000. This amount represents what the state believes to be the full cost of attending an expensive school and graduate school, including textbooks, room, and board. If your plan is close to the limit, don't worry about the future earnings in the account pushing it over. The funds can remain in the account without penalty, but the family will not be able to make any future contributions unless a market drop brings the account balance back down. Good morning, Lucas. How are you? So basically, I can contribute all of the income that the government gives me based off of. Is it really? I remember that being a thing, but $3,000 per child. Is that per year or month? In 2021. From my end, you are blurry. Are you talking about my face is blurry, or are you talking about like the stream is blurry? If it's the stream, it's probably just buffering kind of stuff. And you get this thing where, probably the thing I can do that would fix it for you is if I do that, like change the whole screen, change the initial frame. Oh, you know what? Did I change that? I think I did. Yes, I did. I changed my keyframe interval to 1.5 seconds, which should be able to make our stream just a little bit more responsive. I think we're still delayed by about 7 seconds. Who gets a child's income this year? Oh, we do. Yes. Dave Snyder says starting in July, children under 6 get $300 per month, and older than 6, $250 per month. So I've really got to remember to just put that all away. Woohoo, children finally being helpful. It's not really helpful when I'm not happy about it, to be honest with you. Because here's what's going to happen. Think about what I'm doing with it, right? I'm not going to go and spend it. I'm going to go and put it in a retirement account. Well, not a retirement. I'm going to go put it in a 529 account. And I would dare say that it's irresponsible to do anything else. Irresponsible to do anything. Dems want it permanent. Well, yeah, here's what's going to happen is the cost of tuition is just going to skyrocket, right? And it's not really going to help the disadvantaged. I wish I had the luxury to be angry about getting shitloads of free money. Listen, even if you're like, okay, I do pretty well. With us all staying at home and everything, we can live. Oh, it's not comfortable, but we make it by on just my income, and then my wife works. And one of the big reasons that my wife continues to work is because if she can retire there, then she gets benefits for life, and that can be really useful, right? Because we can get benefits through her work, and then I'll become a Garlic Coin millionaire, and so we won't have to worry about benefits, and I can work on my own, and I can just focus on the YouTube channel. I hope that's, when we become a Garlic Coin millionaire, that or the channel just takes off. I tell you what, I would love to just, my dream is I want to have like a financial news network like CNBC, but it's on YouTube. I think that'd be great. Don't you think that'd be cool? I don't have enough time for that right now. But I digress. Okay. You're right. I think that because I'm a software engineer, fairly comfortable, especially here in Utah. That's pretty far above the average income in Utah, okay? But even if you're not in that position, even if you are making $50,000, $60,000 a year, the median income in Utah, okay, and things are tight, and you're thinking, oh yeah, that extra income, that's going to be great. You better be putting it away, because college is going to get more expensive, man. Like all of the people that have the ability to put it away are going, and the knowledge to put it away are going to put it into a 529 plan, or they're going to contribute more to their 401k in their retirement and things like that, right? And everybody else that doesn't realize that or doesn't have that luxury are going to spend it on living expenses and create inflation from living expenses. What's a good... I'm pretty sure that the median salary in Utah right now is 55, but I could be wrong. So one of the funny things that I deal with, I think it's funny, is we live in like an older neighborhood. You know what I mean? Like it's one of those neighborhoods where there's fairly nice houses, and the majority of the people have like kids in high school. You know what I mean? So it's an older developing neighborhood, and because it's a nice enough place, it's nice. It's one where, it's just really high income individuals keep filtering through. Anyways, so there are parts of my neighborhood that are very well to do. Okay, like some of my neighbors are lawyers and things like that. And so my wife is always like, well, she feels like she's behind. She's like, well, these people, they do this and they do this and this. And I'm like, yeah, they're lawyers. Like you're comparing a high level software engineer to a lawyer. Yeah, it's not, because some of those people probably make $200,000 a year. It's not even close to comparable, right? So 100K is good, yeah. 100K in Utah is really good. Mike Lee reports the average income is 71K. Really? Well, it keeps going up. I mean, I remember when I started, the median income was 50. It was a nice round number, and it was easy to make calculations on everything, right? And now 71, huh? Well, I don't know. So anyways, I think even if you're not well-to-do, but you're still paying all the bills right now, that anything extra you get from the government, you should probably save. And there's a bunch of issues that come off of that, right? One is you're going to continue to see money coming into the market, but is the market fairly valued, and are we setting ourselves up for some real problems if there's a big market crash, right? For sure we are. If there was another big market crash, it could be really devastating to Americans because they put in so much money up in here, and it's like you're putting money in at a top. Oh my gosh, I saw this post on Reddit yesterday where this guy, they had bought the top on GameStop, on AMC, on Bitcoin, on Dogecoin, and Ethereum. And people in the thread were like, nah, it's good. No, it was on TikTok is where it was. Everybody in the thread was like, oh, you're good. No, like if you just hold these ones, you'll be up and you'll make tons of money. Like these are all good. And I'm like, no, like this guy needs to stop. You just start putting into your 401k, buddy, because you're not good at this. The first people to go down are the ones with too much debt. Yeah. So I'm concerned about it overall. I don't think that the impacts on the economy are going to be positive, are going to be what people think. Okay, especially if it's sustained. So here's another issue. Okay, when you look at the stimulus, okay, we've gotten what, 3 stimuluses now, right? We got 3, right? The first stimulus, definitely a lot of it went into the stock market, right? And we can see from Robinhood increased amounts of deposits around that time, and the deposits were multiples of the stimulus check, right? So that definitely happened. Okay. But this last stimulus, they didn't put it into the stock market. Maybe because they had already been burned by the markets and realized they weren't good at it. I don't know. Okay. So then you come in and you say, okay, we're going to give that to people every month. Well, the intention from politicians is that you're going to go and you're going to spend that on goods, that the people that are poor are going to spend that so that they don't starve, and the people that aren't poor are going to buy nice toys for their kids or something like that. That's not what's going to happen. Not over the long term. And that's again where I'm like, dude, if you are paying your bills now and you get an extra $300 from the government, what should you be doing with that? You should be putting that into assets that return value on you. And if the government is giving it to you for kids, then probably the socially responsible thing to do is to put it into a 529 plan. And we just read that there's not much, if any, contribution limits at all. Honestly, after listening to the Republicans is why I haven't seen them improve anything for the average people. I don't think that that's accurate at all. You don't think that things got better for the average person during Donald Trump's presidency? Because I think that they did. I think that there was a lot of things. The thing is that they made a lot of great strides. Man, just their tax change, just the tax change alone made such a huge improvement to the economy. I don't think that like the thing that's really funny is that when things are going well, people don't realize it. You know what I mean? People only pay attention when things are bad. It's like all of a sudden, oh, I have to wait in line for gas. This is all Joe Biden's fault. And they're like super, super upset, right? But, when Donald Trump was doing things that were beneficial to them and helped the economy and probably helped households in ways that they probably don't even realize, like nobody notices, nobody cares. When the stock market falls, then all the ghosts come out of the closet, or it just ends up going all into inflation. I mean, this whole thing that you give people that much money and it's not going to result in inflation, I think is preposterous. Okay, like the price of housing, I think you're going to see over this summer, based on the stats and everything that I'm looking at. We're having a little bit of a disruption. Okay, so what has happened recently is that there was really high demand and the housing market was like in an extreme bubble, and then the interest rates rose and it like immediately crashed it. So it might take a little bit. And then there's the issue with the housing moratorium, right? Which has basically been struck down. So you give it a little bit of time. But by the end of the summer, I think that once again, the narrative that the cost of housing is going up is going to be a big deal. And giving people money because they have kids, I mean, I don't know. I don't know what percentage of U.S. households have children. So it may not be the end of the world because it's limited to a specific subgroup of people, right? So this is another issue is that basically you're creating tax incentives to change people's behavior. And what is the tax incentive that you get in this case? It's you're encouraged to have kids. So I suppose that's a good thing that generally people will have more kids, but I don't know, man. There's always unintended consequences off of this kind of economic meddling, man. The tax change goes to the 1%. Where the hell do you people think all the free money in the government gives to people goes? Come on, man. Yeah. Like, so yeah, this is something that we don't realize. Okay, so if the government gives you $300 a month, where did that money come from? Well, supposedly it's going to come from the 1%. In reality, it's coming from the future, right? In reality, it's debt and it's coming from the future, okay? So that's the first thing that we need to realize is that you're getting $300 a month off of future burdens on your kids and their earnings and possibly having to tax them or higher inflation in their futures. So that's the first thing, right? The second thing is, where does that money go? Well, if we do what is the smart thing and we put it into 529 plans, then it goes into the stock market and it pumps up the stock market, which, overvalues the stock market. Yeah, okay. Or let's say that everybody spent it on food. Oh, what do you know? Everybody has $300 a month more to spend on food. I know what I would be doing. I would be increasing the cost of food. It's just like, supply and demand. What you're doing essentially is you're taking money from one part of the economy and shifting it to another part of the economy, right? So you've got to think about how does that shift affect things, and how does that shift affect different stocks, so you know which industries and stuff you want to be in. So yeah, I think that consumer staples, consumer discretionaries probably benefit off of this, right? But the bigger thing that I was getting at from first of all is that this isn't going to have the impact that they want. They want this to benefit poor families that can't pay the bills, right? That's a very small group of people, right? In a very specific situation. And I think you're going to find that giving them $300 doesn't pull them out of poverty. And what it does instead is it puts them further behind. So yes, they're able to put food on the table, but they won't be able to go to college because it will be too expensive. Because all of the middle class families that understand money put all of their money away into a savings account and have been saving for college. And then the colleges will be willing to charge more for it. And then you that had to spend it on food, you're not going to be able to do that. And making people who were not even born and did not elect officials pay debts, therefore an immoral practice. Man, I never thought of it that way. Wow. I have to think about that one, Lucas. That's an interesting thought. That it's immoral to issue debt in that manner because we're putting financial burdens on future voters that didn't necessarily vote for it. Man. Well, those stimulus payments are not permanent, though, right? I think it's just for like the next year or two, and then it goes away, right? Let's see. Let's see if that zero hedge order says anything about it. Biden has asked Congress to extend the tax credit through 2025. But when does it? So that does imply that it expires, but it doesn't say when. Apparently, that's only for 2021. You missed mini scalps on this line? Yeah, I did. Well, I don't really want to take big trades on a Monday. A little interesting though that it's falling, that the treasuries fell that hard though, huh? Did I miss something while we were yapping here? Biden's economic aid bushy. Jobs are returning, but there's still a long way to go. Supply chain disruptions will take time to resolve. It seems that measures are working. Fed's boss said now is not the time for the Fed to shift its position on policy. Zero hedge says the end of it, the age of speculation. Nah, it needs to be further back. It needs to be more like 10, 15 minutes ago. Till we make substantial progress to close the unemployment gap, we need strong policies. Pent-up demand will put pressures on prices. That will be known. And then back to the thing that started us on this. The types of policies exist just long enough to purchase votes. It is interesting, isn't it, Uzi? Like, we used to talk about this sort of a thing, that voters will start to vote in people that will give them benefits, that they basically vote their own. And there's always these quotes about it, like from Greece and stuff, about once the public realizes they can vote benefits for themselves, that democracy falls apart. And it was always kind of like well, that's a little silly, that's not happening, we're not to that point. And then Donald Trump broke. It was like when the economic crisis happened, he was willing to do anything to bribe people to keep the economy good so that he would get reelected. And then that like opened the floodgates. Then the Democrats won, and the Democrats are like, we're going to give you everything. And I mean, it really gets kind of silly, right? Of course, what we're talking about is something, this isn't the first time we've talked about this, right? Because we talked about it back in January or February when they passed that law. Yeah, they are going to pull back a little bit. I don't know. It's a tough. The dollar has actually been fairly strong this morning. So I'm going to zoom in a little bit there. AT&T lost 50% on its Time Warner purchase. Really? Apple Music announces spatial audio with Dolby Atmos will bring lossless audio to entire catalog. Oh, are we gonna have? Well, if Apple Music moves to lossless audio, then we will see the whole industry go. So is the MP3 dead? It could be. It could be. I mean, Beatport has always had lossless audio, but you had to pay more for it. Something for me to look at later today. Haven't gone browsing on Beatport in a while. I should be been slacking. Been slacking. I'm pretty sure that you giving your kid money, that's considered taxable gift, right? Because like my dad couldn't give me $1 million tomorrow and it would be tax free now. So it does apply to your own children. So the maximum that you can do is 15,000, but that's not. It's not going to come to that. So. Second suspected Havana syndrome case near White House under investigation. Oh man, I think about that day when I felt dizzy and stuff. We ended the stream early. It makes me think about Havana syndrome, man. Like, was I? Somebody was directing a microwave device at me that day? Probably not, but that's what I imagine Havana syndrome feels like. Okay, they're all pretty even across the board. I think I'm just gonna hold it here. I'm thinking about Lucas saying miss so many scalps on this slide down, and I'm thinking, well, I did too, but well, for one, I wasn't really paying attention. Fair enough, but for two, I don't know why it slid, so I don't know if it was really one that I could trade, unless one of them really went first, and I just didn't notice that. Mostly because of Phil's, since I don't market into trades anymore. Oh, right. Yeah, so it seems to me. Well, so the thing that's so funny is that in many instances, it's always one or the other. It's either the market orders just dominate or they get slaughtered. So you get those situations where you take it with a market order. Like I'll come in and I'll put one of these in here, I'll put the stop limit and I'll say, okay, if it goes in, then I'll buy it and then I'll try and get out one tick higher, And I'll do that and I won't get it. It will come back on me first. But then there's other situations where every time you put the limit order in, it's going to go one tick further before retracing. But we do know a reason why that would change, right? If it's informed trading. So if this came down off of a news headline, for instance, or somebody knows something, and we should suspect that somebody knows something at this point, right? Then the person that is the aggressor, the informed trader, is going to use market orders. So if that's what I'm seeing, if I'm seeing an informed move, then I do want to go into it with market orders. But if it's because of a mispricing, if I see a mispricing and I'm taking my trade and I don't believe that there is a presence of informed trading, then I should be using a limit order in the 10-year. Well, pretty much anywhere, but particularly in the 10-year. In the E-mini, it doesn't really matter so much because it moves around so much, and what you get is what you get anyways. In the E-mini, I think that it has much more to do with the specific price that you're picking than it does the Q. Zero hedge. Would the deal have happened if Archegos didn't blow up? Oh, they must be talking about this deal with AT&T and everybody to create like a new super streaming service. Well, we should note that as the treasury came down, the E-mini floated up. Oh, what is Nicholas Nassim Taleb talking about now? By the way, if you haven't watched his YouTube videos, very good stuff. It was kind of things that I kind of understood, but I didn't understand it in such mathematical terms that he was given. There must be more tweets coming because he says like 6-N, 7-N. So where is 1, 2, and 3 of N? Before the currency, there were plenty, before the euro, there were plenty of currencies in Europe, but real contracts were drawn in Deutschmark or CHF, sometimes USD, drachmas, liras, pesetas. So there were petty expenditures. So what we had was competition between fiat currencies just as much with the shekel of Tyre. Note that gold has a lower bound industrial use as a metal and a NO upper bound, which allowed the Hunt bubble. Free currencies have both upper and lower bounds and cannot allow extreme fluctuations. This is necessary to engage in contracts and commitments with future liabilities. Thank you, Nassim. What is a currency? What's the store of value in relation to gold and Bitcoin? Post Bretton Woods, gold kept somewhat its status as a currency store of value, same with its sister's silver. Then the Hunt brothers, unable to buy gold, U.S. citizens weren't allowed, cornered the silver market. Why did fiat win over gold? One of the reasons: governments pay salaries and contractors in the local currency, and B, the share of government in GDP is T greater than 50% in France. When people get their income in fiat, they want goods and services to fluctuate with it. He's got something coming. He's basically explaining why we use dollars and not the gold and silver, which is not something that I would have expected him to be tweeting on Twitter about per se, but I'm glad that he is. It seems to me that what's happening is all of the smart people are coming out now and are trying to explain to everybody why what's going on in Bitcoin is a little bit silly. That's what I think is going on. Well, another tick lower. I don't know, man. The thing with HFT when playing limit orders is your position in the queue is always the worst if you're point and clicking. Well, yeah, so you have to think longer term, right? Which can make it kind of tedious. So like right here at 10.5, if I think that we're going to move down, and I don't think that they're going to clear 10.5, then you put the limit order there. You put the limit order there. Well, not that time because it would have taken you out. But you put the limit order there for the good position in the queue. Like you basically have to game the queue and find a situation where, one, that there's a mispricing, and two, that they give you a queue spot. So it's really hard. It's really rare to catch, I'm finding, unless the market's really moving, and then they seem to leave those all the time. Plastic. A healthy level of inflation is a sign of a growing economy. I don't think that a SPY 8% month over month print is healthy inflation. Just me. Probably wrong. Hey, listen, Fed Bostic, he knows more about this than me. Tick back up, huh? And now the 11 is, but do you see here? So here's a good situation. Here's a case where we could maybe do it. Is like, at the moment, the 10-year is slightly undervalued compared to the 5 and the 30, right? But they're not really pressing into 11 halves, so it's a little questionable what you do here. But you could potentially buy that. And then take it off on one tick higher. When it's really moving, the pro treasury traders don't feel as comfortable. Well, I don't think it's, I think it's that when it's really moving, the robots don't know what to do, basically. Right? Like the way that I think of it is there is a robot out there that looks at the ZB and the ZN and the ZF, and it determines which way the spread is supposed to be going, and it enforces that. So if it gets more than like 4 ticks away, it will start spreading them and trying to take advantage of that to bring the spread back to its historical average. So what would screw that robot up? Maybe there was like a really bad CPI print, right? Right. Informed trading is what screws the robots up, really. Some robots are informed traders, and maybe somebody out there has a really sophisticated robot that can take these things into account. But I think that the reality is that most trading robots that we look at are looking for patterns and mispricings and aren't very good with the dynamic changes. So when the market's really moving off of a piece of news, they leave a lot of efficiencies behind because the robots don't know how to take advantage of them. And because the robots don't know how to take advantage of them, and the robots have chased almost all of the human traders out of the market, and by the human traders, I mean like the market making humans out of the market, then that means that when you do get those kinds of moves, you get a lot of opportunities, right? I'd say value informed traders respond to value. I'm not sure what you mean by that. I think you're responding to something that I said earlier and I've already forgotten. I'm trying to take it when I see something that doesn't match up. Right? So like right here, it might be worth it. Right here it is with the iceberg. Except for that, yeah, and I'm seeing, so it's already too late, but I'd say value informed traders respond to value. What screws robots over? Well, yeah, I would just say informed trading, which is to say that the price of something is changing because individuals with information that is not widely disseminated in the market are taking trades. And the robot tries to account for the informed trading. CME launches micro WTI crude oil futures, just as the small exchange was saying that they had micros. That is so funny. Launching July 12th, micro WTI crude oil futures will offer a new cost-effective way to access the world's most liquid crude oil contract. At 1/10 the size of the benchmark WTI futures contract, micro WTI crude oil futures offer traders a more precise instrument for managing crude oil exposure without sacrificing transparency. Well, well, well. Isn't that interesting? Because on Friday I was reading about how the small exchange was having micros.
15 minutes to market open. Gabi, wake up nach rechts weißender Pfeil aufwachen, erwachen, aufwecken, wecken. Wake up nach rechts weißender Pfeil aufwachen. And don't forget the Strudel.
You know what? I've had both of my robots on, but they haven't taken any trades. I'm wondering if Jay here is like, because the data series is only 1 day. Okay, there you go. So the ZB pulled them up, and when that happened, the ZN pulled right there, right? So it's like the market making robots know what the spread is and then factor that into their trading. And if the other instruments tick up, they'll pull. Right? Which would be a good trade, good way of doing it, as long as there's not some sort of crazy flattening coming in that's way against the trend that they don't realize, right? Like if somebody came in and was buying up the 30 and selling the 10-year with market orders, and there was a ton of them, that could screw up the robot at that point, right? Because he's pulling there when in reality he wants to be selling it and so forth. Right? Informed trading. There's certain things that they just can't factor in. But when it's so slow, it's, I think they do a pretty good job when it's going so slow. That's why I was like, I've had some of these moves where when things were really moving, and I've come in and I've taken these trades and I get them almost every time, right? So it seems like having a market that's moving really helps. There's more inefficiency in a market that's moving. Which actually would, that would match up with our liquidity models too. The more variation in price there is, the more opportunity you're going to have. Now, on that point, you should really, really pay attention to that in the Treasury, because the Treasury tends not to move unless there's a reason. So if it comes in and there's no reason for it to be moving, and then all of a sudden you start to see churn, what will happen is the informed trader that's coming in, he wants to make a trade, but he can see that there's not enough variation. So what he does is he creates that. He starts hitting it with market orders both directions to create that churn so that he can stir up enough liquidity for him to take his position. I've seen that happen before too. So very interesting that they're micro oil. Maybe we should take advantage of that. Because it'll be like, what, 10 cents per thing and then $100 for a whole dollar move in oil? We could do that, especially if we have some sort of pricing aberrations that we can find. Which I don't know. I haven't looked a whole lot about that. And you'd probably get a reasonable spread, right? Now, on the split side... No, wait. What? How much is one tick in an oil? Okay, hold on. Here I'm thinking that it's $1, but it's not actually $1. It's $10, isn't it? Yeah. 1 cent is $10. So 1 tick would be $1. Yeah. So what I was kind of thinking about was what the commissions will be. You'd have to get more than a tick to do it. So we would probably need a 2 to 5 tick price discrepancy to really arbitrage it, which might not happen very often. And it would have to be based on what? Just the dollar? But we could just trade it off of significant news pieces. So like this morning, oil came back up from 60, bounced off of 65, up 50 cents. But I don't know why. So this wouldn't be a good example. But there have been situations where there was big disruptions and we could probably turn around and get into it fast enough to be playing with it. Like, once you got micros in everything, then you could play the game of just have everything up and wait for a piece of news to hit and take the move in the asset that would be most responsive. Pipeline shut down the other day. Well, I wonder why they're coming back up. There must be a reason. Well, I don't know. The move down, I think that there are some sentiment and some geopolitical concerns, and especially things going on with Iran that is leading to some concerns about crude oil prices declining in the short term. So I think that that's why that was moving down, but that's probably not a strong enough factor that for it to hold per se, and perhaps that's why it came back. Just as an example of an easy news play that happened, I think, right at the close when the hack happened. Oh yeah, totally trade. Yeah, exactly. That would be a great example. Like, we got to remember that one of the best inefficiencies that we know of is that the limit order book can only move so quickly. So if you have a piece of news that you really know is significant, you just take that trade. And that's the one that is almost always going to be reliable, as long as you really know what the news is. Now, there's disadvantages to it because you have to take on a lot of risk to do that trade. But I think that you have a real edge there. Deutsche Bank says you would have to have just gotten back from an uninhabited desert island without Wi-Fi to not know that inflation is the #1 theme at the moment. Just in, Russia warns the West that Arctic is our land and our waters. Yeah, okay, whatever. Down. Dang, MSTR is down 6.7% pre-market. I'm really mad about the MSTR thing because I was totally right. Remember, I was shorting it up at 1,000. I didn't have enough money to play it far enough out. If I had taken it 3-4 months out with puts, man, I would be swimming in it. Difficult. But I think my MSTR play was not a bad one. Well, let's not say the play. I think that my overall thesis was a good one. Yeah. Don't be distracted by UFOs, says Emerald Robinson. It's all about the audit. Okay. If you say so. Well, that ZB is really trying to push, and is it going to drag the other two along with it? Because the 10-year could still take another tick up, but they seem reluctant to do it at the moment. And I'm having a hard time seeing a super clear, yeah, super clear correlation with anything in the treasuries right now. Maybe, well, not even the 6J. Well, a little bit the 6J. But the 6J has bounced and has turned around pretty hard, and the treasury is not going with it. Cost of capital is extremely cheap. In other words, it doesn't pay to save with interest rates so low. Well, yeah, what they're doing is they're pulling everybody out of the bond market and into the stock market, right? Uh-oh, the Bill Gates story is hitting the hill now too. So anyway, I only saw this on Zero Hedge, but Microsoft board members thought Bill Gates should resign over a relationship with a female employee, says the report. I actually remember there being stories about that when that was happening. I vaguely remember that maybe being a thing. I could be wrong on that one though. Maybe I'm just imagining things. But now that their divorce is coming up and everything, it's like all the things are out and they're all coming after him. It's really a strange. It's really a strange reversal from the media. Because before, here's how you explain this. This is a good example of where you say, what is the media's interest? Making money. It's making money, buddy. So before they were all defending Bill Gates because of the vaccines and all this and that. But then all of a sudden there's a salacious story out about him. They just jump at it. And but you kind of got to be careful about those stories. I mean, I think in this case it's probably true. I have to think, is it really pertinent to anything? I don't think so, because I don't think that he was that involved with Microsoft anyways, right? I don't know. Seems like there's always going to be something. Like have you seen this with Majorine Taylor Greene? Then now they're like going through her taxes and things like that and trying to find a discrepancy on her taxes. Yeah, they're accusing her of all sorts of things. It's like it comes when it comes out, it comes out. Okay, so I need to pull this down here, and it looks bullish to me. Yeah, for sure. Okay. Cool. Well, they had a pretty good down move overnight that could be retraced. At least at the moment, it looks like that's what they're going to do. Probably, though, after they have a really good flush out on the top here, they may back off for a little bit. And they may even try and turn negative for a bit. So I don't know if it's that clear of they're just going to buy it or not. Yeah. So that was a pretty solid change in the volume for sure, right? I guess the overall numbers are still a little tepid, so probably either of those trends could be easily canceled out quickly. She's not legislating, she's just social mediating. It was, yeah, that's what it seems like to me. It seems to me like what she's doing is she's going around and harassing all of the prominent liberals to try and agitate them and get herself in the news headlines, and it's working. It seems to me like she wants to be in the news and that she wants all the liberals to hate her, and it's working. Hmm. Okay. Okay. So that is resolving to the upside now. Probably they're going to make a new high, so probably I can move this. Yeah. Well, it's fairly large amounts trading there, though. Cumulative delta hasn't completely come through yet. This is a good example of the sign change law, right? Came down, we had an equal move back up in cumulative delta, but it went further in price because of the sign change. One thumbs down. I guess he still visit. Well, I hope that he doesn't get my channel in his channel recommendations anymore. Top Islamic Jihad commander killed as 3,000 total rockets were fired from Gaza in first week. Hmm. Okay. Yeah, this is gonna come through all the way, probably. Oh man, this could come so much further. I'm having a hard time with my scene here. How long I should hold it for? – . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . Okay. Okay. Oh, whoops. What the heck? Did you see what happened there? Oh, that's funny. Okay. So there was a little order in there. I think I wanna right there maybe. And so I tried moving the order and I accidentally switched the columns up instead. Okay, so there's one off. I'm sitting here like, oh, I need to get chat more riled up about Majorine Taylor Greene. You know, get them talking. But then I'm like, what am I going to say about her? She wants the attention. Yeah, of course. I don't know, man. Oh, yeah. And apparently she claimed 2 houses on her taxes, which you're not allowed to do. I always think, like, because I always want to be, you know, trying to do the right thing and everything. And I'm always think, okay, so if I was running for political office or somehow I became politically relevant all of a sudden, what sort of things would the media go after me on? Well, I've probably said way too many controversial things on stream anyways, right? Okay, so I think I was reading that area correctly. The question now is if I want to take more risk on it going again. Well, I'm not so sure that I do. Maybe in that situation, I should have taken both of them off. And then I would be a little bit less concerned about taking on additional risk down here. All abundant retweets. Joe Walsh, this Republican Party cannot be saved. It's gone. All right. You know, that does remind me. I did see one thing on all this political thing. So, you know, there's the guy with the costume that, you know, was, I don't know, stole Pelosi's gavel or something. I forget what it was he did exactly. Oh, there's Ace. How are you this morning? Did you catch some of that up move? Anyways, they were all saying that the police told them to come in. And yesterday, a video was released showing just that the police officer was basically allowing them to come in. So that's been causing all sorts of upsetness. Probably doesn't change anything, though. Oh, you got 10 points worth? What? Oh, so you were in at like 52? I'm surprised. I actually, the funny thing is I kind of thought about getting in down in there, but I was like, I don't think, like when it was like 705. I guess it did kind of float up, but they came back down and retested it off of the open. So it's, I don't know. I don't know. So this area right here isn't bad. It's actually retraced a little bit more than I thought maybe, but I think you want to wait. Seems like that's a little bit too quick. Well, it's okay to say that you got to be careful about what I say. Don't. I know he's just joking, but you know me. I can't stand it. I'm just be careful about inducing people to trade. That's all. I don't think that showing people what you did or even showing people your industry, your entries and exits is inducing them to trade. Saying I'm taking a trade, this is what I'm doing. That's not inducing people to trade. But saying you should follow me, hey, let's take this one right here, that is inducing people. Did you roll in here with RJ? Well, we haven't really seen him today, have we? Where are you, RJ? It's a Monday. Interesting. So hold up. If I come over here, I see. I was misreading my chart. Don't worry about it. Ignore what I was just saying there. Supreme Court agrees to hear abortion rights case. Uh-oh. Uh-oh. When I was first starting, I would have loved to have someone give consistent, usable signals so I could make money immediately instead of having such a steep learning curve. Maybe. Ask yourself this, though, Ace. If you had had that, would you have come across the trade that you have? It would have been completely different, right? And especially since, like, here's the other thing is, like, what if the thing that you're doing stops working? I think there's a good chance of that because I have some of what we've gamed out. You still got to come over and review the code to make sure that it's really accurate to what you're doing. But some of that suggests that it could change, right? Then you'll find a new one, right? You'll adjust. But if you had been dependent on somebody at the very beginning for their signal, then you wouldn't be as capable of coming up with that new trade and adjusting. You get what I mean? There's something to being careful legally with what advice you offer. Even the psychics post for entertainment purposes only. People end up in court easily now and is a pain in the you know what, yeah. Sure, one has to adopt to the market. I'm honestly, Ace, I'm still on the fence about does this really work? I'm one of the things is that I'll go through and I'll do a strategy of some sort. And it'll come out and it will have a certain percentage win rate. Well, so I was thinking about this because in Nicholas Nassim Taleb's latest video, he was talking about this, that most of the statistics that we use, especially things like standard deviation or correlation, are actually random variables, which means that if you had a system that was a stable system, but then you took this data set and you took this data set, the standard deviation that you would get for the two of them would be different, right? And then he showed a distribution curve of that. and then you looked at it and you said, okay, so here it says that you have like a correlation of spot 2 or something like that. But in reality, there's no correlation between these two variables. Like, we know we've designed it as such that there should be no correlation. But when you do a distribution, if you do a Monte Carlo simulation of it and you do the distribution, then you find that, yes, actually, there is zero correlation, right? So I will go through in my own back testing, and it'll be like, you get, oh, by the way, you need to get rid of that. And you'll get like 2%, it'd be like a 52% win rate. Be like a 52% win rate. And you say, well, that's a trade that works, right? And you've done it over a large enough data set and everything else like that. But when you really dig into the statistics and what we know about the statistics, that's not enough to be hyper confident about it. You know what I mean? And so those results are likely to just be random. Oh man, well, you know what? So if it comes back up there, I might. But right there, I was like thinking, like, maybe I should get out of this. Because that was we're getting the sign change again. Yeah, interesting. So you can see here again, so there's a down move, and then equal move up, and cumulative delta went higher, and then there was another round to that meta order, and then we got a meta order down that was about equal to that right there. So probably profit taking on that one. Oh yeah, that actually, I guess that means I should take it off, huh? Well, I'll put it right there. Equal one down, and we went down further to the low of the day. Interestingly enough, there was another little reversal, but they didn't get anything out of that one. So if another meta order comes in and buys, I think that we could get a new high pretty easily. But they're tracing over this. They might get stuck at 60 if they try and come back across this. RJ Will says, no, I don't know what you mean. Backtests are flawed. Well, what I mean is this. So let me draw it. So you come over and you do a backtest. And the risk reward and all of that sort of stuff are like equal, okay? And set in stone. Hard stops, okay? So here you got this thing, right? And here is 50%. And then way over here, this is 45, 40. Okay, I'm only going to show that much because that's just like the percentages that we get are pretty close in most technical systems. Okay, so, oops. $55, $60. So this is going to completely turn over. I mean, look at that. They really came back down. Well, so did I manage my risk on that one appropriately? Well, I was able to come out of it with a win. And I think I managed it really well on the original move up. I probably should have cut that off a lot sooner, huh? I missed the last minute, so I had to leave when you were saying around the fence. So here's what I'm trying to say is, so I come in and I do a back test, and I have equal risk reward, and it comes out to 52%. Okay, so right here. Okay. Does that mean that it works? Well, so this is where you can start doing a Monte Carlo simulation. And how far could it be out? Like this, if this was an outlier, right? The distribution could be like this, right? If that's the case, then this trade doesn't actually work, right? Because 45% would be completely random. 50% would be it's not random, but it's probably not enough to have to cover costs, right? Well, you know, with it right there, it could just be like this, right? Or is it really like this? Which is what we would really like, right? So because these are all random variables, that is, you know, if I was to run a Monte Carlo simulation or I was to choose a different data set, I'm going to get a different win rate out of it. So how high, if you have equal risk reward, how high of a win rate do you need to have to know that it's, you know, that the system really works? And I don't know. But what I can tell you is that 52% is not enough. Because I've had systems that came out at 52% and then I ran them and they were awful. Right? That was like Reginald, I think. Right? But the gist of it is these are all actually random variables. And so this is where Monte Carlo simulation can be useful. Although when I've done this in the past, when I come back, do I have one that I can? Yeah, I think I can. So let's come back over here. So, well, actually, let me do it. Let me come in here and look at this way. Because, oh, no. It was, oh, it was ace R. Boom, 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 boom. Arm threshold deviation 3. Test period 5. Stop 8, target 1. How come this one doesn't have target? Oh, it should be reward as 1. Yeah, okay. Slow period 10, R period 50. Okay. So, and we'll run this over back to January of 2020. 1 minute chart. Include commissions. Okay. We won't try to include slippage or any of that sort of stuff. And we'll do it on ES there. Okay, they're recovering. Maybe I should, well, if it's like right there, I will. So it's changed a little bit since the last time I ran it. Looks like it's not done so well recently. That's very interesting. What about, well, so first of all, let's turn off the sound. Let's turn off the sound. Oops. There we go. Turn that off. Okay. Let's just try ace 5. I like the music. Your stream is lacking music. Hey, that one's not bad. It doesn't take very many trades, though. Yeah, that's right. Ace 5 is too conservative. Ace 3 is probably a good one to look at. When we did all of this originally, it was mid-May here, but I don't know. It's kind of a weird one. I was hoping to have one where the thing that I was starting with here for you was you know, a positive backtest. Well, I could try to okay, let's do that. You just do a reward factor 2 and stop of 8 and the most simple. Because what the actual profitability of the system doesn't really matter to me here, really. What I really want to do is come and look at the Monte Carlo. So you can come in here, win, loss, all, long, short, all, number of simulations 100, removes losing outliers, winning outliers, number of trades, and then you can graph, so you can. Okay, so when we come in here, this is the net profit. But what I really want to see in the particular instance for what I was talking about was the win. Oh, but it doesn't actually show you the win rate. Max drawdown is a problem. Bish. Oh, okay. So this is a good example. For instance, say we have a strategy and we believe that it is profitable. Let's say that we know that it is profitable, but we're not sure that we can trade it. Well, we can come in here and we can run this Monte Carlo simulation, and we can say max consecutive losers. Oh, okay. There was one instance of the Monte Carlo simulation that we had like over 31 losers. So it's suggesting that it's within the possibilities based off of the statistics to get 31 losers in a row, right? Which is, $1,500, right? On micros. 5 tick stop, yeah. Oh, actually, it's only $150, right? Don't know if you talked about that CME group to launch micro. Yes. If it's liquid, there is no way out except time to shine on oil. Well, yeah, if you can teach me. So I was thinking about it, and I was like, well, we could try trading it off of news pieces, but it would be more interesting, or not more interesting. I would be more interested if I had a direct inefficiency. So some sort of comparison that we think should stay in line, or I think what you did was just as a trade into the close. I would be, now that one I probably would have to do off stream, right? Or that would be a problem. So I think I'm getting to the point where I might need to get another screen somewhere where I can take trades without the stream seeing them, because some of the ones that I'm trying to take advantage of, I don't think I can handle anybody trying to front run it. So let's see here. If I come back here and I look at these, oh, anti-RSI would probably be a really great one. Okay. Sure. This one right here. And do this one. Open in strategy analyze new strategy analyzer tab. Okay. So it's gonna run it. Well, I guess if you want crazy news inventories each Wednesday or OPEC day. I'm a little wary about trying to trade the inventories, but I was thinking of it more from the perspective of, you know, when we're sitting here and we get something over the news clock and we get something that is, you know, unusual news that we know is going to move the oil markets more than other markets, then we can go and take it in oil or something like that. Okay, so here I got a strategy that appears to work, okay? I'll just make this smaller. Okay, now this was only going back to March. Made 6,000. Oh, and let's come back and do this back test. Like, there we go. Okay. So this is a strategy that trades against the RSI. Like it looks for that overbought, oversold on a 1 minute chart, and it actually trades against it based on certain conditions, right? But it only went to March. So let's have it go to today and run it again and see what we get. Most people don't know how to do research. Like, many people just look if it's a winner, loser, scratch, but narrow it down. Like, for instance, when doing research, always look at the following. Well, it was a little bit better, actually. The music is, you know, I have been kind of thinking about, maybe we'll bring music back. I don't know if you guys care. Because the choices for us to do music is way better now. Okay, so we got something that wins, and when it wins 57% of the time, which seems pretty good, but we only have 157 samples, so that's not good. So let's come and do the Monte Carlo simulation. And let's do a lot. Let's do like 500 simulations. Generate. Bada-boom. Okay. So when we look at this, I mean, the way that they intend to show it is, okay, less than 7% of them were unprofitable. And there was a certain number of them that were very, very profitable. So you got a pretty wide range there, though. From there to there. It's a pretty wide range. Max drawdown. So a couple of these had really bad drawdowns, right? Let me put that in dollar terms, currency. Okay. Like a lot of these on E-minis, $5,000, and some of them even $13,000, right? So does it work? It seems like it kind of does. But when you look at the Sharpe ratio, you realize, oh, okay, wait. Look at the Sharpe ratio. Even a really good one, it doesn't get a good Sharpe ratio? You know what? They never came up to my order up there. I'm not so interested in it now. AMC is carrying my portfolio right now, says the YouTube Finance. Okay, so when I do my research, I look at the following: daily range, which session, how many ticks did the market move, was the news based and oh sure, about like what causing moves and stuff. Was this a machinator gave us too, by the way? He sent us a spreadsheet. Today is rollover day in oil, so I'm cautious. Yes. EMC over Kathy Wooden. There you go. There you go. So what's the problem with this strategy? This strategy appears to work, but it has bad drawdowns. Oh, I see. This is like based off of your win rate. What are the chances of having a run this bad? Right. Totally. Totally related. Okay, so coming back over to here. Let's see if we can get one that appears to have a good Sharpe ratio. And these ones are all tick replay ones, unfortunately. Super RSI? This is funny that anti-RSI one is the top one, but it only had 3 trades, so it's like, that's useless. CJ this should be good, but I think that the what it's getting is not realistic in this situation because not because of the Monte Carlo or anything like that, but because you can't actually get the price that it thinks it's getting because it's too fast. The market moves too quick when it happens. This one, I don't know. I don't remember if this one was a tick replay. It was. There's this super RSI one. I mean, it says that it's profitable, so. It's not profitable. Not anymore, at least. It's not including commissions either. Negative spot 84. Now, I wonder why that is. Those ones were all funny. Some of these need to be. I need to remove the ones that aren't checked, maybe. Anything below 7 slip is probably okay. Double bottom is probably okay. Did you try and filter the strategy like when and why it fails? Yeah, so what I've been doing on those actually is I will come in and I will have like a range of indicators, you know? And I will just have them spit out at the end of every trade. And or not at the end of every trade, at the entry of every trade, I'll have them spit out what those variables were. And then I'll take it into R and I'll try and see if there's any skews about what those variables tend to be when it wins or when it loses. And whenever I do that, I'm able to find some skews, but the number of trades that get filtered out because of them cancel it out, essentially. So it doesn't, they don't help. It's actually really frustrating going through all of that. Okay, so here's one where we only did all of 2020 and it won. So now let's have it go till today and we'll see if it still makes 20K. Cool. So this is one where I've been, where it's a little bit questionable. So this has targets twice. It's using a risk reward of double, right? It's using a risk reward of double. So risk reward of double, getting 40% seems okay. So now let's come and do the Monte Carlo and do 1,000 simulations. Da-da-da-da. Well, this seems to be suggesting that this is really profitable. Look at that. Only 5% were unprofitable when they did the Monte Carlo. Man, those ones where it didn't work, though, the drawdown was brutal. Well, the drawdown on all of these is pretty brutal, actually. Yeah, you get some of these where the consecutive losers gets like super crazy. I get the profit factor up to 2. Sharp ratio up to, and so we're still not getting, you know, so I would think that if I could get a strategy where the Sharp ratio was over 1 for like 50% of them, I would be like pretty effing happy. That'd be crazy hard though, right? How often does this setup occur? I'll share this one with you actually if you want, because I don't believe it actually works. Actually, it's not bad, right? When you look at it, it's got like a profit factor of 1.28. So, and the Sharp ratio is 0.5 though, right? So it's like, so this one happens, it's not every day, almost every day. 0.9 trades per day. Oh, you know what? I can't send this one to you because it has a secret indicator. So the gist of how it works is it's looking for a double bottom. Like here on a 1-minute chart. It's fine. I was just curious. So if I come over to this chart over here, so you get these little pivots. So if you have the bar closes above the previous bar's high, then that's a pivot low. And if the bar closes below the previous bar's low, then that's a confirmed pivot high, right? So it's saying if you have two consecutive pivot lows that are equal to each other, then it tries taking it. But the way that it tries taking it is counterintuitive, actually. It's actually counterintuitive. And I don't remember how it did it. I don't even remember where I put these ones. There we go. If you got a double pivot, oh, no, I don't know. Oh, yeah. Oh, yeah. The reason that this one works is because it's taking on risk. So when you look at the drawdown, there's some days that it does really poorly on. So what it's doing is it has such a wide, it does have set stops and targets, and so your average winning trade is larger than your losing trade, but you can get pretty big drawdowns because of that. Like you can get a loser that's almost $2,000 on an ES contract. What are the minimum metric numbers you look for on a strategy? So I have a video on my channel, if you go and look, that's about performance metrics, where I kind of talk about that. And I kind of go in where I say, so if it's not over 1.1 profit factor, it's probably not even worth messing with. Once you start getting into the 1.2, 1.3, you have something that can potentially work. If you can get it over 1.5 to 2, that's where you'd really like to be, but it's super hard. And I don't think that any of these ones that, so like when you look at, if I sort this by profit factor, because these are every strategy I've ever run. Well, not every strategy that I've ever run, because some of these, you see how they're not pinned, and I'll remove them later. See, like some of these that are like way up here aren't realistic because they didn't take hardly any trades, right? But, you know, we have to go quite a bit down the list to get, you know, 1.5, right? There's not very many that are above that level. And the ones that are, many of them are outliers because it just didn't take a lot of trades, right? You're looking at it as a 1 minute chart. Yeah, it's a 1 minute chart. Like I say, like it's not really... I don't know. Like it seems so. So there's an issue with this strategy. How do I make it show up in? Oh man, I don't know. Okay, so if I come back to the Monte Carlo and I show you the maximum drawdown, okay, how big of an account do you have? Because now this is trading at ES, so maybe you could say that you could choose micros, okay? But so let's say that you have a $1,500 micro account. Well, then you could survive most of the time, I guess. But if you have a $500 micro account, you could blow out almost every time. But the thing that I've noticed is like you lose $500, people stop, right? So I don't know. This strategy is not as good as it appears. Because how do I say this? If there's a double, so this is kind of a price action setup, right? And if you get a double bottom with the pivots, then yeah, that should seem like that's pretty good, right? But it actually breaks below those pivots most of the time. So the way that most people want to play those pivots is wrong. So what I've done instead is I've taken, as I go around that spot, and I say it is going to reverse eventually, but it's going to go way further than everybody expects first. And that's how and so because of that, that's why you have some drawdowns that can be pretty ugly. And thus, when you come in here to even get the Sharpe ratio above spot 5%, right, not very many of them do that. So is it really a very good strategy from a risk reward perspective? It's not. And that's why I don't trade it. I don't know if that made sense. I hope that made sense. Some of the young people I talk to online ask how much a day trader should have in their account as a minimum. What exactly do I tell really young people in college? Tell them to go and get a degree in financial mathematics and then go and become a trader at a large US bank. That's what if I was in college, and I wanted to trade, that's the way to do it, man, is that you really want to go and trade at a bank, because it's a different game and you can trade and you make money. Whereas in retail trading, most retail traders make money, and even if you are making, it's really difficult. So all that they have. I mean, to trade futures, I think that you've got to minimum, well, I don't know. It kind of depends on how good you are and things like that. But for a beginner, I wouldn't think about funding an account with less than 1,500. 1,500, probably the minimum that I would do, especially if you're a beginner. Now, if you've been doing it a long time and you're really confident about your edge and you know that it works, and you know what your maximum drawdown is, then have you been able to successfully implement a strategy that combines price action with order flow? So I'm going to say no. So the issue that I'm having right now is I can do a back test with order flow stuff, and it will tend to show actually pretty good results. But the issue is that you get these spots where it's like, it was only there at that tick for like one moment. So if you try and enter in at that tick, you will never get that tick, because as soon as it's been sent to you, it's not at that tick anymore. Right? And so theoretically, you could get filled, but the latency of the system is such that you don't. Right? And so that's the big issue that I've had with my order flow strategies, is I'll come over here and I'll run these. And I'll even, so like Jay is a great example. So like J2, I have him set up here. He is doing something that like should work. Like it really should, he should like be winning all the time, and it should be really difficult for him to lose. But then here, look at that. He's already taken 4 trades, and 3 of them were bad, with a skewed risk reward too. Maybe the back test is wrong. Right. So anyways, my point is, when I do the order flow strategies and then I come into running them in sim, they don't pass the sim portion. So my rule of thumb is 2,000 per one long in M2K. That's no stop if you fuck up your long. Interesting that they came back to the open there and they're just kind of chilling. I think I'm just going to, it didn't make very much, but I'm just going to be happy with it because it's Monday. Go find $500 at a time, lose it, and review how if you do the whole 15 at once, you'll blow it and learn nothing. Well, that's for sure. Like, so if you're trading E-mini, if you're trading E-micros rather, you start with 1,500. Like if you go to edge clear, you have to have at least 1,500, right? So then you lose $500, you should stop, refund. Totally. Now, but I don't know. So there's another factor in here that you do kind of have to factor in. It sucks that we have to do this now, but when I started, it wasn't really like this, but now it is, and that's that it's like $30 to $50 now just for the data. So even if you don't trade it, live and you just trade it sim, you know, you kind of have to factor that in. Like, how long do you need to go? Do you need to keep going and all that, you know? It's a total pain in the butt. And then you've got to pay. So for me, my costs per month alone is $100. I spend $100 just on costs. And I don't even trade it live every month either. Like, I don't think, well, I mean, we'll see how the rest of the month goes. If the rest of the month in May starts going really, really well, then maybe that'll change. But I tend to avoid the summer. Suits your style. I, for instance, prefer oil to every other market. I've been thinking of an indicator that's based on support resistance for how pullbacks tend to react when these levels are reached. Well, so I saw this interesting thing the other day that actually sent me on this big, long bender of research, and my conclusion was inconclusive. So what these guys were doing was they were using Python. And in Python, there's a library to find local, in SciPy, rather. Oh man, they're getting just demolished over here in the E-mini, huh? Anyways, it will find local highs and lows. So if you get this sort of a thing, SciPy will say, okay, it's here, 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 and here. And then you could come in and you could say, draw me a regression band based off of that. And then have me do stuff off of that regression band. Then now I'm like, oh, okay. Now I think I could actually realistically test some of these price action setups that people talk about. But I could only find it in SciPy. And I wasn't about to like write a wrapper or anything like that to get it into NinjaTrader. And I couldn't find a suitable library that did the same thing in C#. And there wasn't a good explanation anywhere for how SciPy did that. Although I do believe it is open source and I could look at the code. But when I looked at the code, that one method that was actually had like a ton of sub methods, and it did not look like a simple thing. So trying to pull it over into C# would be a lot of work. I don't know. And then that just takes me back to what we really need to do is we need to write our own platform that connects directly to the Rhythmic API and is written in Rust so that it's really performant and handles concurrency and all of those sorts of issues really well, and then make it so that the way that it does its programming is with Python, so that you write stuff in Python. And then we write all of the same kind of backtesting stuff that NinjaTrader has, but in Python. Yeah. Sci-fi. No. SciPy, PY. Scientific Python package. That's what it means for. Anyways. But yeah, that's a lot of work. I don't think we're doing that. So the yields are going up and the indexes are kind of rolling over a little bit. I wouldn't say that it's too hard. They had a really good run on the open. I'd say that. It was a really good run on the open. If we get below, let's say 41.38, then it would probably be viewed as more significant. Humans are complicated beings. Stop trying to pigeonhole everyone. Yeah. Well, those tests are interesting, but you're right. Like people are more complicated than that. But it's the same thing with markets, though, right? And strategies is that they're way more complicated than we give them credit for. The performance of things is way more complicated than we give them credit for. The issue is that we all come in with these ideas about the way that statistics work and the way that markets work that aren't based in reality, and then we try trading them and we get screwed over. How to automate the boring stuff with Python, yeah. I think that if I'm gonna write my own platform, that it's got to be Python, because the vast majority of the quantitative world works on Python. And the issue is that these guys that are running strategies on Python tend not to have very good data. They tend not to have very good backtesting frameworks. So, if we could get something that you use Python, but it would have all of the stuff, like the order flow bits built into it and everything for us. And then on top of that, we could put all of the things in the platform that we feel are lacking in other platforms, particularly as it relates to synthetic instruments and spreads and so forth. I know. I'm not going to beat on it today. I don't feel like beating on it. There's been a lot of empirical studies about that category, that ranking categorization system. There you go. There's been a lot of empirical studies about that ranking system. Categorization. Anyways. Not so hot today. I guess I'm just sitting here wondering, like, why is the market so unhappy? Clarita will take some time to get worker demand and supply into balance. Notable that Clarita has said attuned and attentive to incoming data at least 3 times. Could be a hint that we'll hear from Powell or see it in an FOMC-based statement. Important point, Clarita said that because they see inflation is transitory, he will be putting more weight on employment. See, like, there's stuff going, but it's unclear why. And it's just flipping around there. You know what? I never turned on financial juice. That would help. GS momentum indicator now in negative territory for the first time in 12 months. So it could be technical selling. Well, ASO's good on the short call. Yeah. Well, I mean, it's just a momentum play, right? That's why I'm not touching it, because I don't know what it's going to do. I mean, look, I could have been sold it and be down 5 points right now. I guess technically you could start taking longs here. Like here, we'll do it. Oh wait, hold on. Need to look something up. I should go back and redo this trade because I have other ways of fixing some of these issues that I ran into with it, and yeah. I would just do this one. I think so. I wasn't paying attention to it, but I think I might have missed like my own kind of a setup along here. Yeah. Oh, definitely. Well, except for that, I maybe would want to wait until the open anyways. So let's try it here and see what happens.
Winston's Mom says now appearing, steken lobster dancing nightly, BURL Ives. Silver and gold. Please remember to tip the cocktail waitress or speculators by hitting the like button. Danke.
So I'm noticing that it sure seems to be moving a lot on very small, relatively small changes in Delta, huh? Oh, I need to manage this because that doesn't make any sense at all. Nate Silver, I don't know if the USS Master will soon reach the herd immunity threshold. And my prior is the answer is complicated, i.e. it's reasonable, depends on variance. It does seem like folks probably ought to wait a bit before making confident proclamations either way. I'm pretty confident that we've reached herd immunity in Utah. Bloomberg crypto tweets Bitcoin is no AOL or MySpace. You think that? I think it's a little too early to be calling that one. It's almost time to close up shop. Yeah, what should we put down for today? Ooh. I gave you that strategy before, didn't I, bots? You have the ace one? Because I think you helped me test it. I don't recall. Maybe not. No, I don't think I did, because I was like, no, this is top secret. I didn't give it to anybody. But we could give it to you. Well, so I took that. It wasn't. I took it because it was by the open. When you look at the oscillations of it all, it kind of looks stupid now. So, boom. No, you don't think I have. Let me do a little cleanup on it, and I can send it to you, and you can see it. The issue is still, again, how does he run it? I don't get that. Because I've tried some of the things and it doesn't. I don't know. There's so he'll give me like some general, like some general ideas about how to hold it and run it. Like, for instance, one that we've talked about bots is like, you and I have talked about, rather, is like, if you have it, if as long as we're above the previous bar or whatever. Like I put it, if we're moving up, I put the stop at the previous bar's low. So you'd have to have a pivot for it to stop you out, right? And so anyways, when I follow those rules, I find that he does follow them generally, but sometimes he breaks them, and I don't know why. I've changed it around a bit since I gave it Seth, but he's declared it garbage, so I just gave it to myself. Yeah. Well, yeah, he has changed the entry signal a bit, hasn't he? But I don't know. I backtested it, and the backtest is not quite the same. But I can't backtest how he holds it. That's why I keep saying it seems to me like it's how he holds it that seems so great. And that's where it's like, well, when he doesn't even. Yes, that was my approach. Well, I don't know. If anything that's been working over the past year, I think you have to be a little skeptical about, right? Maybe Seth's backtest is garbage, or maybe Seth's qualifications are just. I really think that that's what it is, right? See, what I'm saying here is, okay, yeah, if you run it and you trade this signal over the last 3 months, probably you've made money. And what I'm saying is, if you run it over 5 years and you look at all of the other statistical properties about it and everything else like that, there's a good chance that it's just random. And so, really, where are you making the money from? Probably from the fact that the market just always goes up right now, right? So then you probably will make some money on a on your futures trading account, but you wouldn't be able to like start a CTA with it. I think part of the problem is I don't think you can accurately back. Well, what is it? I don't know. So with yours though, I'm not so sure, because with yours it sounded like we had it pretty fairly nailed specific, you know? Mm-hmm. Mm-hmm. Like, I'm just saying, I could come in here and I could just randomly go long. If my strategy over the last year was pick a random moment and go long, you would probably make money, right? So that's what I'm getting is like when it changes around, is it still going to work? So then I went back and I started finding other sorts of things where it's like, okay, if you do all of this other stuff, okay, look, you can make one tick on the ZN 70% of the time. Is that enough for you? I don't know. I'm convinced one could take a trade to make. If it was an ES, if it was an ES and you gave a big stop, yeah. But isn't that kind of the point though? Is, hey, I don't know if you realize the long-term properties of the system. So if you were to go out and say, I'm going to start a hedge fund with this, and you try and get other people to invest into it and you manage their money, I think that over a long period of time, you would run into issues. So it's kind of like, oh, my standard of like what's a strategy worth trading is just really high. You don't give a flying leap about why not? You should. If it's really a profitable strategy, then you should start a hedge fund. My strategy is YOLO my life savings into the top of the market before. If I can find a strategy that really comes and matches all the numbers, and that's the thing is like I find stuff that seems to like be okay sometimes, but doesn't always tick all of the, yeah. Don't want a job? I'm sorry, you don't want to make millions of dollars. That's just, or you sell it to somebody for a hedge fund. Okay, but my point is just that some people could come in and say, oh, I had 3 months profitable trading micros. That's good enough, right? And for me, I've done that before, right? I've gone through and I've had like 6-month periods where I've done amazing, and then all of a sudden it all fall apart, right? So to me, the ability for this thing to trade for 5 years and hold a certain drawdown and have a certain amount of consistency matters way more to me. And when I do the back tests on these things, they don't match those metrics. Yeah, so look, I could come in and I can do this, Ace. Like, I could say, I'm going to buy it. Come on, buy it. Yeah, I'll cancel that one and buy it right there. Okay, I can buy it, and I'm only going to take 4 points, and I'm going to lose 16 points. Now, I bet you it's going to, okay, there you go. I made money. Okay, there's $50, right? If it was an ES contract, right? Okay. Was that actually a good strategy? Bet you I could do that and win 80% of the time. Betcha. Just because you're paranoid doesn't mean they're but was it? Is it really a good strategy? Because the one time that you lose, you lost four other trades, right? So you literally have to get like 80-85% win rate to actually make money on that. And the thing that's so crazy about it is that here's again the Nassim Taleb thing is that the more fat-tailed your strategy is, right? Because we win 80% of the time. Here's 80% of them, okay? It has very fat tails. So it would require it requires more trades to see the probability of the system, right? So in order for us to really accurately see how this particular, how the thing that I just did there trades, you probably would need at least 2 years worth of data, taking it every day. Only then will you see the fat tails and see that it's not a good strategy, and that if you trade it, you're likely to blow your account, especially if you continually size up. You get? What's going to happen to you is you're going to be making thousands of dollars a month, and then you're going to blow out. Happens every time. So, what is the point of that? Just because a strategy is profitable over a certain time period doesn't mean that I want to trade it. I want to trade something that if I had the time and desire to, that I could turn into a hedge fund. The fat tail, the power of political knowledge for strategic investing? I don't know. So anyways, but then we go back off to it. It's like, you know what, though, I can take these trades that are like, okay, well, like just what I'm doing now. And then if I actually hear news that makes me think that it's going to move, I can go and I can trade that. And that's been working great. What do you mean it might happen to you every time? It doesn't mean the same thing is true for everyone? Yes, it does. If you trade that strategy, you will blow out. If you trade it long enough, you will blow out. And that strategy not being Ace's thing, that strategy being that where I just showed you, where I just take 4 ticks and I have a huge stop. Hedge fund, lease novice, hire people. Yeah, no, I do think it sounds fun, actually. Think of it this way, Ace. If it's not good enough for me to go out and turn it into a hedge fund, then why wouldn't I just take the money and go and give it to a hedge fund and let them trade it instead of doing all of the work and trading it myself? Right? Or conversely, here in the market, where I've been saying it's like, if you go long, you're going to make money, yada, yada, yada. So that's why I haven't really been actively trading it with my account. I'm letting the money sit in there because I know that whatever it is that I'm doing right now, because of the nature of the market, it's my buy and hold index fund account is going to do better. And it has, right? Now, when that flips around and then the market's going up and down, and my ability to read the news and stuff will make more money than that, then it's different, right? You could be on the Provo River right now, Ace, but you just go and give it to a hedge fund, right? Strategies have to be well, that's true. But what they're trying to tell me is, hey, this strategy, it seemed to work good this one time, or it seemed to work good over this particular period, and that's where I'm saying I think you need more than that. And what I've taught, and you go through and you watch all the videos that I have, I just don't understand how you guys still don't understand that. I don't understand what I need to do to convince you of this, that you can have strategies that have properties that you can be fooled by randomness so easily. And how do you know that what you're doing is really truly has edge versus that it's just random and it happens to be that the Federal Reserve is buying everything right now? Because that's what it seems to me. How do we reach these needs? Well, it's time for me to get going, guys. So, I don't really have a week open. Market struggle like weekly open. I don't know. I guess I could have had that, but I don't think that's true. Man, you're gonna throw something like that at the end of the stream, but I think you're full of crap. You're retired, and he has his wife who makes up for income. Okay, I cannot afford a $15,000 drawdown. I can't. Just saying, if I did that strategy, I would lose everything. I know it for a fact because I can go look at it, and I can actually even show you when in the past year it would have happened. Later.